Hey folks, Dave Nadig here, financial futurist at VettaFi. I wanted to talk briefly about what's been going on at Credit Suisse. I wrote a piece this week calling it the most boring financial crisis, the most boring banking crisis we've had. And it's really true. If you think about what this is going to do for your portfolio, the honest answer is not much. Credit Suisse was at max about a 0.5% holding in ETFs. That would be VEA, Vanguard's fund. So it's a de minimis hit that those kinds of things are going to take. The other place that Credit Suisse bondholders will get hit is that additional tier one capital. That additional tier one capital offering really not widely held in the United States at all. A couple of folks in Europe may get hit, a couple of funds over there, but here in the US, it's really just a handful of mutual funds. You can even find that additional tier one capital generally at a very small level. So this isn't going to directly impact many portfolios here in the US. However, that doesn't mean there aren't things to look at. Credit Suisse is actually quite a large player in the ETN space. This is their largest one, GLDI. This is two lines you can't really even tell. One's fair value and one's trading price. They're spot on. The market is not applying any kind of discount to the ETN because they think something bad's going to happen. The ETNs are so high up in the capital structure that, frankly, they're not going to be touched by this. Interesting question whether or not UBS is going to continue to let those funds exist, those notes exist. UBS is, through the eTrax group, one of the only left standing ETN issuers out there. Whether they bring those Credit Suisse funds into the fold, we'll see. What are the long-term implications? Obviously, this is just more consolidation in the financial sector. That can be a bit of an issue, right? Eventually, that becomes a problem. If we end up in a market like the Canadian market, where you've only got a handful of large banks controlling an enormous amount of capital, that effectively makes them an arm of the government. And I fear we may be heading a little bit that way, where every bank is too big to fail, and the banking system itself becomes just sort of a public utility. Not saying that's bad, but it really does change regulatory systems. It really changes how commerce works in the United States. I think we're going to be wrestling with that for some years to come. The other thing we're going to see is more interest in crypto. Honestly, Bitcoin and a lot of decentralized finance protocols were put out there as an answer to this kind of potential problem. Well, now we've got one of those problems. We've seen the move in Bitcoin. I don't think it's going to a million or anything like that, but I do think we're going to see a lot more heat about crypto in the coming year. And we're going to be looking back on this sort of hiccup in the banking system. That's going to do it for me. If you're interested in following me, you can follow me at Dave Nadig on Twitter or follow VettaFi at VettaFi. Also, make sure you head to etftrends.com on the daily for insights there into what's going on in that financial advisor community. Hope to see y'all soon. Cheers.